Hello, I'm Angeline and welcome to Beat the Street, the show that gives you all the tradable news ahead of the Wall Street Open. Coming up, US stocks indicated higher. Netflix wows with its subscriber numbers. Also, chips in focus. Semiconductor stocks could be active after ASML's results. And Tesla watching the EV space because Tesla could rev higher on a Redwood report from Reuters. This is a report that said the company has informed suppliers that it wants to start production of a new mass market electric vehicle codenamed Redwood. Now, a very warm welcome to the show. Not long now before Wall Street starts trading, let's show you the S&P 500 first, because what a wowing chart this has been. Last year, remember, the talk was all around the Nasdaq. Well, so far this year, it's the S&P 500, and part of the reason for that is because it has seen such a run-up recently. The S&P 500 closing at a record high for the third day, extending a bull market run it had confirmed on Friday. Now, the other big thing that we are looking out for, aside from earnings, of course, is the PMIs as well, which come ahead of GDP numbers. Ahead of all that, let's cross over now to Chris Vecchio, standing by for us in New York. Chris from Tasty Live, part of IG Group, of course. Chris, thank you so much for joining us. What do you make of this exuberance on the S&P 500?
Looks good to me. The market's clearly in a Goldilocks state right now where it's not concerned about what the Federal Reserve is going to do next. In fact, the odds of a Fed rate cut in March have dropped from 81% at the start of last week to where they stand right now at 42%, nearly cut in half. And the market seems to enjoy it. It's for good reason, too. Inflation's being defeated. The economy is growing. The labor market remains resilient. The S&P 500 still has some ways to go ahead of it, though. The chart that you just shared last week at this time was giving us the impression that maybe we were carving out a head and shoulders topping pattern. But as things evolved and the price action changed, it became clear that it was actually a little bit more of an inverse head and shoulders pattern, pointing to a target of 49.81 on the upside given the recent breakout. Currently trading in right around 49.20. We still have a little bit ways to go there higher. And the market has proved resilient despite those cut odds declining. This is clearly a market that wants to go higher right now. The path of least resistance is still up for stocks here as we make our way through these final ways of January.
Clearly, we're seeing lots of momentum this side as well. The benchmark S&P 500 trading around 20 times forward 12-month earnings. Also, this is before we get those, earnings from some of the big tech in the coming week. I remember having you on last week, and you said something like they're going to have to be pretty good, these earnings, to keep the momentum going.
Yes. And they have been good. That's the other side of this. Earnings have been coming out strong. We saw this with TSM last week. We saw this with ASM, the other semiconductor, overnight. We saw this with even NVIDIA. Netflix. And Netflix isn't a big part of the story, right? It is one of the Magnificent Seven, so to speak. But it's not part of the AI narrative. That said, it's crushing its results, plain and simple. And so that's what you want to see here. The fact that PE ratios are up isn't necessarily a surprise. PE ratios tend to expand in the early phases of bull markets, and the notion that we're seeing an economy doing anything other than beating everyone's expectations is downright silly, because they are, plain and simple. Even the optimists out there didn't think the economy would be this stable this point in time. So a soft landing still very much in view. The GDP report tomorrow, more important than the PMIs. There has been a little bit of a disconnect there where PMIs have been softening, but the economy's still been growing around 2 to 4%, as it were. I think when you get to GDP tomorrow and then PCE on Friday, we're going to end the week on a very optimistic view about which way the U.S. economy is heading right now in the short term. Not saying that's going to continue, but it's been a lot better than anyone's anticipated. There's a reason why people feel so good about stocks. As Stanley Druckenmiller once said, the best economist I know is the stock market.
Thanks very much for that quote. Chris Vecchio there from Tasty Live in New York. Now, as we were just talking to Chris, he mentioned Netflix. We've got this animation especially for you because here are the numbers for Netflix, as you can see on the screen. However, Netflix in terms of its subscriber numbers, really wowed, and this part and parcel of what's happened as well on the crackdown on the password sharing. Moving on to some other corporates as well, we've had eBay, one of the interesting ones that I've been watching for. Let's just check on the share price to see where it is at the moment. eBay, all sessions here on the IG platform, and it is slightly higher, not a huge amount, 0.2%. The reason why I'm checking in on that is because eBay was up as much as 3% earlier. The company is set to cut around 1,000 roles, or around 9% of its current workforce. This comes after in February last year, the company announced a workforce reduction of 500 employees globally. Also checking in on another all-session stock, Tesla, one that it is very popular amongst IG traders and clients of ours. Tesla currently all sessions there up more than 1%. Tesla, that move coming after a Reuters report said the company had informed suppliers that it wants to start production of a new mass market electric vehicle, code named Redwood, in the middle of next year. Mega caps like Microsoft, like Amazon and Meta, also we're watching those for you because there's been a lot of announcements in the AI space, and these are some of the companies that are all involved in it. Let's just bring up Microsoft for you first, if we may. Microsoft is all sessions on the IG platform, and it is just a touch higher ahead of the cash session. How about Meta? Let's have a look at that as well. Meta is currently looking like this, all sessions on the IG platform. They're creeping, not a huge amount, but they're all also underpinned by the fall in US Treasury yields. As I mentioned earlier, S&P 500, continuing this climb and actually confounding many investors. You heard Chris Vecchio say it earlier, those that would have thought that perhaps we would have some money taken off the table by now, but the momentum seems to still be going. IG's Axel Rudolph has been looking at what the technicals say. And we'll come back to that in a moment. Just had some audio issues with that. Before we go, let's have a last look at how the market is looking. Just showing you S&P 500, or otherwise called the US 500, on the platform. That's how it's looking at the moment, as I mentioned earlier, confounding those that said this investor euphoria can't possibly continue. But the S&P 500 closed at a record high Tuesday for the third day, extending a bull market run it had confirmed on Friday. This coming on top of some robust US earnings, and also a lot of data that shows the US economy still remains in rude health. And that's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the cash open. For more trading insight, do follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV. Mm-hmm. Yeah.